Hello everybody, welcome to the Real Estate Show. I am Matien Nazier, hope you guys are all doing well. Ladies and gentlemen, as I mentioned last week, that this week we're gonna have two amazing people from RBC here with us, Mr. Nabeel and Mr. Parvinder Happy. Mr. Nabeel is a General Manager of the Toronto Western region, and Mr. Happy is one of the top producers with RBC, and we've known each other for a while. So ladies and gentlemen, today we're gonna ask Mr. Nabeel and Mr. Happy some of the programs what RBC have for you guys, and what is basically the variable rate, fixed rate, qualifications, and much more. Okay, so Mr. Nabeel, welcome to the show, and thank you so much for again taking your time. And Mr. Happy, thank you for being here with us. Can you please give us some introduction, some information regarding your position and what RBC can offer to some of our audiences, and what regarding some of our clients is. I know, again, like even with other professionals, we always tell them, say, hey, listen, we do have half an hour, so we just want to be very specific and very brief if we can, okay? So how long have you been with RBC, Nabeel?
Well, Matien, first of all, thank you for having us on the show on behalf of Happy and I and Royal Bank. And before we even dive into that, the amount of great work you're doing throughout the show, I've seen it a lot, and that's just phenomenal. First of all,
thank you, appreciate that.
Both him and I.
Well, someone's paying attention.
Well, so we are, right? So about me, been in the bank for about 15 years now.
Okay.
Managed the mortgage division from the Greater Toronto West region. Work with incredible colleagues like Harminder, and very proud for working from Royal Bank at this point in time. I'll pass it over to you.
Yeah, thanks Nabeel for that, and Matien, thank you so much for having us. So I've been with RBC for 8 years about now, and my role right now is mortgage specialist. I've been lucky enough to be part of Nabeel's team now, going on to my 4th year, and we've been partnering, with different realtors such as yourself. I've been fortunate to work with Matien, who's one of the top guys working with RE/MAX, and yeah, it's been great so far, and we're just looking forward to another successful year.
Well, listen, I'm also actually very proud, and it's a huge privilege for myself and the team to have such an amazing individual, guys like yourself, how professionally you are. And when we received the award, I said, listen, it's actually not me that I got the award, it's the people that we work with, that behind the scenes, that they get things done for us. And actually, you know what, RBC is the biggest bank when it comes, in Canada. And they're, to me, I did mortgages myself, as some of you guys know, but RBC's products are amazing. But what does RBC actually giving out in terms, like the rates? What are the rates right now?
So right now, clients can choose depending on what their plans are.
Okay.
That's the most important thing. We know that everyone likes to hear numbers, because everybody wants to have the best rate.
Okay.
But we want to make sure that they connect with, individuals such as ourselves, so that we can help them plan, because we need to make sure that we're choosing the right product, as you mentioned, and as well that we're choosing the right type of rate. So as you mentioned, there's fixed and there's also variable.
What's the difference? Because a lot of our audience people, they always ask me the question, but I like a professional such as yourself to explain what's the difference between fixed rate and variable, and right now, what is the variable rate through RBC?
So the difference between the two is that a fixed rate, the name kind of gives what it is. So it's fixed. So you can choose the term that you want that rate to be fixed for. So it's entering into a contract. So you can choose between 1, 2, 3, 4, or 5 years.
Okay.
And then that secures your rate for that term. So that makes sure that your rate's not going to change. As long as you have that mortgage for that term, the rate's not going to go up, it's not going to go down, your payment and that rate is guaranteed.
Okay, and what would you advise people right now to do? Because they're saying that, well, the economy is kind of in a shake. We're in this pandemic. A lot of properties are selling quite over than what it's worth. Would you advise people to go with a fixed rate, or would you advise people to go with a variable rate?
I think I'll take that question. So it's such a great question, and that's why I want to answer that question. It depends on what exactly you're looking for. So now, if you're looking for a principal property, you want to stay there for next 3 or 5 years, we recommend a fixed rate because you really want to live there and get the term out of it, right? Now, if you're looking for an investment property, you do want to plan to sell it in like a month or a year or 6 months from now, you probably want to go variable rate because there's always a penalty involved at the end of that, right? So for the audience here is we always recommend everybody that look for exactly what your need is. If your investment, you probably want to sell it a year, there will be a penalty at the end. Variable has a smaller penalty, which is 3 months of interest.
Okay.
You can go with variable. You want to live there for 2 or 5 years, you rather go with a fixed because that's something a different product. So that's why the products are very different, right?
Okay. Now, obviously, every institution have their own qualifications when it comes down to approval. A lot of people say, well, Matien, I have, let's say, on $1 million, which is your decent average townhome, or a bungalow rundown is $1 million. So they're saying, if I'm going to come up with 10%, what type of qualifications in terms of beacon scores and other qualifications that are required RBC is looking for?
Yep. So
wanted to finish my question, is what are the necessary pillars that they need to have?
It's a great question. So whenever a client is going to be purchasing a property, and the number that you threw out here was $1 million, right?
Yeah.
So we have to make sure that we're meeting the down payment guidelines. So there is a program available to clients, which is called having a default insured mortgage, right? So you mentioned 10% in this case. So if you're going to be purchasing a property and you're only going to put down 10% because you want to enter the housing market and you don't quite have the 20% right now, you are able to do so, but you need to make sure that your purchase stays under $1 million, right?
Okay.
So that would be a requirement that your purchase price stays under $1 million. And then the requirement for down payment in that case would be the minimum you have to put down is 5% on the first $500,000. And any dollar that exceeds $500,000 requires a down payment of 10%. So there are ways to put down, I guess you could say, the minimum down payment. And then there is also another option available where you can put down 10% or even greater. But then if you do put down 20%, this makes it so then you're not part of that default insured program. You're just getting a conventional mortgage through the bank.
And I'll just touch base a little bit on the default insurance thing you said. There's insurers at the back end where CMHCs plays a part, and folks who are putting less than 20% down payment, they have to get their mortgage insured through one of these lenders at the back end, and there's extra premium for that. So you'll probably hear in the market sometime people try to come up with a 20% down payment, so they don't have to go through default insurance or CMHC or anything like that. But if they can't, they can go minimum of 5, as Arminder just said, but then they have to an extra premium insured by that.
Okay. And one more thing, Nabeel, we have a lot of people right now in our database as buyers, what's called basically first-time home buyers. So the process, what they need to understand is what are the qualifications percentage that you need to put down if it's 500,000, what's over 500,000, and what's over $1 million. What are the minimum down payment structure? How does that work? I think, Happy, we did one and you were like, no, Mr. Matien, if you go anywhere more than this, there's a certain different, I want you to explain this. How does that work?
Yep, so for first-time home buyers, or anybody that's purchasing a primary residence, you are able to put down less than 20%. By primary residence, we mean that this is a home that you will be occupying as the owner. You're going to be living there. And for 500,000, 5% on that is the minimum, and that comes up to 25,000. So the bank would require you to have at least $25,000 for the down payment. You also need to have something called closing costs. So closing costs is going to pay for additional things such as land transfer. It's going to pay for your legal costs upon closing. And we usually tell clients to budget anywhere between 1.5% to 2%, depending on where the property is, because the land transfer can be different depending on where the property is located. And as long as you have that $25,000 plus at least about 1.5% to 2% of your purchase price, and your purchase is $500,000, then that's the minimum for how much funds you would need available in order to make the purchase.
Okay, so but does RBC have a 5% program still right now, or no, it all has to be over 10 or 15 or 20?
So when it comes to down payment, it's not bank specific. It's something that is for all Canadian buyers. So this is a requirement that is regulated, I guess you can say, through the government, that whenever you're entering the housing market, you can put down less than 20%, but then it all depends on how much your purchase price is, and that will determine how much funds you need available. So there isn't, you could say, an institution out there that has a special program based on down payment. There is a minimum guidelines for every lender based on how much the purchase price is that you're buying and how much clients will need when you're purchasing a property in Canada.
Okay, that's great, but also I really want to clear that off, that for first-time home buyers, if you're purchasing a $700,000, you're putting 5% on a $500,000, and then anything over that, you need 10% on that. Am I correct?
That's correct.
So that you would need 10% of the 200,000 and then 5% on a 500,000.
That's correct.
Okay, because this is a lot of, we actually, weeks ago, when we started talking about this, we had a lot of people texting us and emailing us and like, Matien, this is how much I have. Am I, can I qualify for this? And then this is what I was actually telling them, exactly what you just said. Okay, well, thank you so much. Yes, Nabeel.
So I just want to touch base on that. A lot of first-time home buyers, you touch base, they're also newcomers to the country, right? That's why they're buying their first home.
Yeah.
So we have a program where we can also see there are a lot of people, let's say, moving from US, for example, right? What were their jobs? What were their credit score? If they're able to show that product or that information to us, if I go back, we're doing them for many years now. A few years ago, you're a newcomer, you got to build your credit, build certain things in Canada before we can lend you. But now if you're showing us that you're a newcomer to the country, but you have a professional education or you are enrolled into some sort of program in Canada, your mortgage gets done very, very fast and it's a smooth process.
Okay. Now, does that vary according to continent and country, or that applies to just US?
I mean, US was just an example, right? So now there are countries where, like US, the reason why I said, because the credit bureau is very similar.
Similar,
right? Very similar. Now, there are some countries where folks are coming in, are newcomers, they can show that, Middle East or, South Asia, they can come and show us that I'm doing certain program there, and now I'm enrolled in a certain program here, dentistry, lawyers, there are higher chances of getting their mortgage approved very fast.
Okay. Nabeel, also in terms of the credit score, because I know all the five bank, I think it's the six A lenders or seven?
Big five.
Big five.
We say, yeah.
But we do have a couple of other ones behind the scenes that are also A lenders. What's the minimum credit? Because a lot of people right now, we're also living, like I said, people are losing their jobs. They can't keep up with their payments, so they're losing their credit score. What's the minimum credit score requirement if you want to apply for a mortgage loan for RBC?
So if you're looking to get approved through an A lender, you're going to need a credit score of at least 650 in today's market. And it's not just based on the score itself. Like, a lot of people are always looking at, what's the number, right? But the number is not the only important part that plays a factor. We also need to look at the actual report to see what type of lending this person already has, how their repayment history is. Because you can have a score that maybe it's a little bit lower, but you're always making your payments on time. Maybe some situation happened where you needed to borrow some funds from, like a line of credit or take some type of loan, and you're carrying a little bit more debt at that time. But as long as we're able to explain, what happened and what's causing that score, we are still able to get, approvals for clients or help them out. And for clients that, have a score that doesn't meet that threshold, RBC does partner with Alternative Mortgage Solutions. We have an in-house program where they deal with any client that, for example, has down payment, they have good income, but maybe their credit score is not the greatest. So they do have those, I guess you can say, B lender options available, and that's something directly through RBC. And it's not a long-term solution; it's a short-term solution to make sure that clients are still able to make their purchase because they want to enter the market at a specific time, and then we're able to hopefully transition them over to Royal Bank. Usually it's after a year. If it needs to take a little bit longer, then we keep our clients well informed on what they need to do.
Oh, very well said.
So let's take an example for all the viewers right now. Somebody has a credit score just because when they were moving, they forgot to change their cell phone bill.
Correct.
Right? Now their cell phone is going to the old address and it's going 30 days and 60 days and 90 days later. They forgot to change that. It does happen very often in the market and the community, right? And then because of that, their credit scores start to drop. But in reality, they're a good credit. They've always made good savings. So we look into these things into more detail. And if that was a particular situation, that doesn't make them a bad client, even though the credit score was a little bit lower than that.
Mr. Nabeel, I think I should, just one other thing I wanted to add to this is, even for myself, as a real estate professional, as an investor, I'm even having, in the beginnings, I was having time on how to maintain my credit. Right? So what would you tell our audiences who are watching right now? What would you tell them to do in order to keep their credit maintained properly? Like, what are the steps, like if you were to say 3 to 4 steps, what would you add to that?
So first step, I would say, in order to maintain your credit, make sure you have some sort of credit.
Okay.
I'll tell you why. And I'll tell you why I say that. Because a lot of people don't take any credit card thinking that I want to have a good credit.
Okay.
Once you don't have any credit card, any sort of credit facility, you actually don't have a credit, right? So that's the biggest myth. I just want to break it here because make sure you have some sort of credit available, whether it's a credit card or a car loan. That's a step number 1. Now, step number 2 is make sure you're making payments on time. If there are any challenges happen, right now you said we're going through pandemic, you work with your lender. Your lenders are very open to work with you. Like, I'll give you an example of RBC. When pandemic happened, we actually were delaying 6 months of payment to the individual. So their credit was not getting hurt. So make sure you make the payments on time. Also, we always say that if your credit limit is, let's say, 10,000, try not to max it out, for example, right? Okay. Try not to go over around 10,000, 9,000. Try to keep it a little bit low, right? If you can. And I totally respect, it's a different market, different world we live in. If somebody have to, they can. But once you start to maximize your credit start to get overloaded a little bit, right? Okay. And that's when you, that would be the 3rd biggest step, I say. And the 4th step I would say is have a limited credit, but not too much credit. And I'll tell you what I mean by that is, and I don't think I should be saying that, but if you have 25 credit cards, it just becomes very challenging for you to manage your credit, what payments go at what time. So have limited amount of credit cards. And
well, there's also a lot of apps right now that we have that on your phone that you could automatically receive if it has increased or decreased, right? So I think also for some of the audiences that who are watching, if you guys don't have these apps, there's like Borrowell, there's Equifax, there's a couple of so many other ones that you could download on your phone and just make sure that, see what's happening, look what's dropping your credit, because it's so important. Now, a lot of times I think when you're so busy, so I'm in contact with Happy, and then the client has an amazing income, it has a beautiful down payment, which is, is very well regarding his purchase. But the biggest thing that's killing him, and then guys like my colleagues that I work with, they're saying, you know what, I'm so sorry. This guy is like at 520, 530, and he has late payments everywhere, right? That doesn't even get qualified, but we have someone with like 7%, 10%, and things are just decent, and it just, the banks accepts them, right? So it's very, very important. So that thing that like Happy, you were telling me, Matien, make sure to tell your clients and customers, everyone to have the 3 pillars that are very, very important. That's your down payment, your income, and your credit. All of these 3 factors goes together, okay? So it's not just because if you have $200,000, please correct me guys if I'm wrong, that if you have this $200,000 and you want to buy a $700,000 property, but your income is not that great, and then, but most important is your credit, right? So that's really, really important. One more question. Sorry, I know we don't have much time. I'm going through this as fast as we can. In terms of refinances, some of the people, our audiences that are there, they also called it like, Matien, the market is so hot. We don't know what these are baby boomers and in the future, what they're going to go through. They were asking me, is it the right time right now to go for a refi, invest like somewhere out of the GTA area, or they should wait till the spring market?
So as per Globe and Mail report that came out, 30% of market is investors right now.
Okay.
The report that came out recently. And who are these investors? Folks who have refinanced their properties and bought outside GTA as well, right? So we always say, folks, that it's very hard for us to say it's the right time or the wrong time. But when you look at the future, 2022, CMHC, Royal Bank, Remax, nobody's expecting a drop at this point in time, right? So if you start to see that, then you probably will say that this is the time you can refi because your equities are pretty good. I mean, folks who have bought the property last year, their equities have gone up massively throughout the year, right? If you have equity, if you want to play in the market, as I said, 30% of individuals are playing this market. Go to incredible people like you who will be able to help them a really good property based on what their budget is right now. GTA, if you
Sorry,
want to buy
they're going to
GTA,
come to me, but I'm going to refer them back to you, though.
That's fine, right? But again, in terms of where to look for properties, I would say that based on the budget where they want to, or are they looking for a cash flow, right? And a lot of we saw a report. A lot of folks have gone to Windsor, London, Ontario, Cambridge, Hamilton. A lot of activity. I was reading a Remax report the other day, and a lot of folks have bought properties there. So.
And what's the max that they could go for, Arvinder? Like, what would be their in terms of loan to value on their property?
So it all depends on where they're going to be purchasing. So emerging markets such as London, as Nabeel pointed out, might not have that standard loan to value guideline that everybody's used to hearing about. By standard, I mean that everyone hears about I need 20% down to get the bank to lend me 80%, which does apply for a lot of lending and a lot of mortgage needs, but it all comes down to, where is the property located? That's going to affect how much the bank will lend, because some of these markets are just starting to grow and the bank sometimes may not be able to lend on those properties yet because the market's still in that growth stage in that city. And it also depends on what the purchase price is. So what I mean by that is, like, if you buy a property, let's say, somewhere like 5 million, right? That doesn't mean that you're going to be able to qualify to get 80% of that purchase price, because there are rules on how much the bank will also lend, depending on what your purchase price is and as well as where you're purchasing, as I mentioned before.
That's why I think we talked about earlier, the value of pre-approval, a value of going to the bank first and asking them how much I'm eligible to go out there and buy. Because sometimes what happens is, like, I go back 15 years ago when I want to buy my first property, super excited where I want to buy. Hold on a second, take a step back. How much I can be qualified for? Because there's no point if I can be only qualified for $500,000, start going out, checking out the properties for $1 million. It just puts me into a bad shape where I've liked something which I can't afford. So it's always a good idea, and even as Happy said, that check out what you're capable, pre-approved for, and then you can just go in the market, right?
So as a real estate agent, what would you advise your other realtors? I know you guys work with many other top producers in Toronto and in the GTA area. But right now, we don't seem to have the time on pre-approval. What would you advise your real estate agents so we can advise our clients before putting an offer in a property?
This is a tough question, honestly, because I understand what you're saying here. There's offers.
Well, actually, Nabeel, this is what some of the questions that we got emailed and text message to. I want them to hear it from you, because I know I've been telling them, but I want to hear it from you guys.
So I'll tell all the audience, I tell everybody that, listen, just make sure you please get a pre-approval first. That's me. Now, when I say this, a lot of my colleagues said, Nabeel, you don't know what you're talking about, because when I have 60 offers on the house, I really need to go with something, right? So we as a bank have always said to everybody, all the clients, all the viewers here, that make sure you get some sort of pre-approvals and make sure you have looked after yourself. Now, as I said, a lot of when I go to my realtors, they said, Nabeel, I can't do this. There's 60 offers. So it's the amount of risk you're willing to take. If you think that this is a really good offer, if you think you're qualified, if you think your bank is lending you want to go for it, that's the personal choice you make, right?
Well, very well said. But also, I think what Mr. Nabeel, what you're trying to say is that you're telling the consumers, the people who are investing, purchasing, or doing any sorts of flip, is to do your own homework, right? So make sure that, again, that we call it the 3 musketeers or the 3 pillars, is for you to know in terms of your credit, your income, and your deposit before making a purchase, right? Because now all these properties, one property actually 2 days ago, property was listed in Brampton, a bungalow for $699. I don't know, I think Jennifer will hear this, and Chris. $699, the property had over 100 showings, and it had 65 offers. and it sold for $1,037,000. Now, so if you're competing with something like that, you want to make sure you got a very good deposit, good income, and good credit before you
and a good realtor like Matien. Don't forget that.
Well, that's why obviously you got to be with a guy that has done his due diligence and experience before when you're putting an offer. Well, that's great, guys. But a couple of more things. I see that time is really not on our side. In terms of the pre-construction, so how does that work? Very briefly before I let you guys go, and also in terms of the foreign buyers. Right, what you need to look from them. So I think Nabeel, if you want to answer this.
I'll take pre-construction, you take foreign buyers. So if you're looking for pre-construction, you come to Royal Bank. And not that I work for Royal Bank, but I know the product of everybody else who's offering that. So we can lend you a product. There's a thing we call a firm approval. So if your property is, let's say you bought it today, closing in 2024, if we give you a firm approval today, that approval will be lasting 2024. What that means is we're not going back and checking your credit again and income and everything. If we give you approval today, that's a firm approval. Now, when we say this thing in the market, a lot of people don't believe that because they say it's too good to be true. It is actually true. And a lot of people say, how can you give me an approval when my property is still dirt land at this point in time? We can give you approval based on the land itself, the market rent, we can give you approvals based on that. So, and we are the only bank who can hold the approval for the longest possible. Now, there are some banks who can do about a year, 18 months. We can, based on the project itself, we can go up to a very long amount of time. So a lot of products I know in market are closing in 2026, 2027. Absolutely. For that reason, not that I work for a bank, I said, but talk to Happy or Royal Bank at that product can be there for you because you want peace of mind. If you have closed something today, you want to make sure it closes when you really get the keys at the end of the day, right?
Very well said. Yeah.
And touching base on foreign buyers.
Correct.
So this is a really, I guess you could say, it's a tough question because it's not one formula, right? So foreign buyers, the biggest question is it depends on which country they are residing in and why they're purchasing the property in Canada. Those two things are very important. Banks do have rules in terms of who's allowed to purchase a property in Canada. Unfortunately, we're not able to lend to every single country. There is a list of countries that we do work with that are eligible to purchase properties here.
And sorry to cut you off, Happy. And what's the minimum on the foreign buyers that they need to come in here, down payment-wise?
So 35% we're looking at right now. And we also need to make sure that, there's a reason why this purchase is happening, right? Because there are, as you know, as being a realtor, the supply is so limited right now in Canada in terms of being able to find a property. We need to make sure that people that are actually living in this country are able to find a home first and able to purchase those properties first before, somebody who's just living outside of the country whose need might not be to live inside that property themselves, right? We need to make sure that everyone who actually wants a home to live in is taken care of first, and investments and foreign buyers are, I guess you could say, the next priority after that.
Well, very good. Thank you so much. Again, ladies and gentlemen, I'd like to thank Mr. Harvinder Happy himself and Mr. Nabeel that he's so busy as a general manager on the West End of Toronto. You could see how busy his schedule is, and I'd like to thank both of you for being here. And the reason why we're also the top producer in our office, because we work with the top bank and the top professionals like two individuals that joined us today. So if you guys have any questions, concerns regarding about the topic that was discussed right here today, please don't hesitate to contact them directly. This is why, the reason why we're doing the show is to give you guys the information and the necessary tips of in terms of buying, selling, investing, refinancing, or thinking of the future of getting into the real estate. This is why we're here to share these informations to you guys. Well, again, I'd like to thank you for everyone who's watching this show, and thank you for all of your support. For all those thumbs up, it gives us the encouragement and gives us the energy to come and do this here with you guys. Like to thank you, and till next week, Okay, I want you guys to be well, safe, and good night.